see if I got this conjugated right. She's in Chicago, but she's a Boston native and fan of the Red Sox, which means she's rooting for the Dodgers. I think I've got that right. Shana Sissel, President and CEO of Banríon Capital Management, joins us here in our Bloomberg Interactive Broker Studio. Did I get that right?
We totally got that right. I think, as we were saying before, Dave Roberts has to continue to do everything he can to help the Red Sox, whether it be win a World Series as a player, give the Red Sox a World Series as a manager, and now he needs to make sure that the Yankees
prevent the Yankees. I get the whole concept there. All right, before we get to your market call, which we want to talk about, Pink ETF. Talk to me about that.
Yes, so Pink ETF is near and dear to my heart. I am a breast cancer survivor, and October is Breast Cancer Awareness Month. The Pink ETF is issued by Simplify Asset Management. It is a healthcare ETF. It invests in healthcare. It is not specific to cancer or breast cancer in general. It's the only pro bono ETF on the market, meaning that the manager does it pro bono, and they donate all of the net profits of the fund through its expense ratio to the Susan G. Komen Foundation for Breast Cancer Research. So, it's October. Yep. Breast Cancer Awareness Month. All right. You can do your part, and this is a interesting way to do that. The fund has a great track record.
Yeah, absolutely. All right, so Karen from Spring Lake, that's for you. Talk to us about the markets. What do we do here? Do we just sit on the sidelines until the election's over and then become investors again? What are you telling your clients about these markets these days?
Well, the election is the number one most important piece of news that the markets is waiting for. We have a virtual tie in almost all the polls, and I have opinions on where I think that kind of leans. But in that kind of environment, companies are reluctant to make any big capex decisions. They're kind of putting a pause on policy, waiting to see, who wins, because the rules could be substantially different depending on who becomes the victor.
Well, what do you make, Shana, of the betting market? We talk kind of ad nauseum, it feels like, at Poly Market and Predict It and how that impacts it, what the Trump trade is or isn't. If we're still in agreement that it's a coin flip, how are people positioning if we are kind of at least reading about and Bloomberg's reporting about kind of the so-called Trump trade, if it still feels kind of like a deadlock?
Well, I think there's this one little caveat, nuance to this, which is that I think in polls that are showing a deadlocked electorate, that is actually pro-Trump, in my opinion, right? I think we've seen this in every election he's been involved in. The polls tend to underestimate his his voters, because being associated as a Trump voter has some negative connotation in the broad public, right? So people are less likely to be honest about it until they get into the voting booth, and then it doesn't matter because it's truly anonymous, or we hope so. In that case, I think that when you see something where it's a virtual tie, it's probably leaning more in Trump's direction than it is in Harris's direction. That's just my opinion.
All right, so elections aside, it seems like we've got a Fed that's accommodative. Seems like earnings generally remain fairly strong. The economy remains fairly strong. Inflation coming down. How constructive is that for you guys in terms of taking risk in this market in place?
Well, I think this is a market where you can take risk. So for me, the way I position portfolios is I want to make sure I can get the most upside I can from the equity markets, because I think that the probability of upside in the equity markets is quite high. And I think it's also high probability of risk assets outperforming. So I want to be able to take that risk. I'm not as certain about fixed income markets. So I'm taking some of my fixed income allocation and putting it into more alternative strategies, which I think do better than fixed income, but allow me to take more risk in equities because they are diversifiers that tend to reduce overall portfolio risk. So that's kind of how I'm positioning myself right now.
Within taking on risk, when you say that, do you mean within large caps? Are you skewing out more towards like a small cap? I just am looking at, in terms of earnings, we're going to hear from this week alone, Alphabet, AMD, Microsoft, Meta, Apple, Amazon, and that's really capex comments have been making up so much of the NVIDIA trade. So when you're looking at allocating risk to equities, What does that look like?
So I do think it involves some of the high flyer growth stocks. We haven't had an environment that's conducive to small caps or value in a while. Jason Trennert from Strategas did a great piece last week called 10 Things I Think. And one of the things he talked about is since 2009, we've been in this perpetual QE cycle where companies haven't been, permitted to fail. And so we've been in this perpetual late cycle, business cycle. The business cycle's kind of disappeared. And in doing that, it's been a complete headwind to anything that would benefit from things winning and losing. And not allowing companies to fail has kind of also increased the haves and have-nots. So I'm willing to take more risk in those larger cap names. That's where I actually think there is more risk. But also things like Bitcoin, which is not a stock, obviously, but is a risk asset, in my opinion. I would argue small caps could be considered a risk asset, but value wouldn't be, right? So you're probably staying away from some of your cyclicals, and you're going with your more risk growth beta names is where I would be paying attention right now.
Shana, I know you have a lot of experience in alternatives, and I've been surprised when I talk to retail advisors how willing they are to embrace alternatives, and to a much higher percentage of their portfolio than I would have thought. Where do you see opportunities in alternatives these days? Private equity, private credit has become so big, hedge funds. Where do you see alternatives? How do you talk to your clients about that?
So private credit is credit. It's correlated to credit markets. Private equity is equity. It's correlated to equity markets. So they belong in equity and fixed income. And while they're alternatives in the sense that they're liquidity terms and not available to everyone, they're not necessarily diversifying alternatives. I think the opportunities lie in those diversifying alternatives. Things like hedged equity, and there's a million different ways to slice that pie. That's a pro and a con of that asset class. It's, they all kind of get thrown in together, but you can do hedged equity a million different ways. Market neutral, managed futures, global macro, more of those hedge fund type strategies, but also looking at, things like sports rights. I've talked about this a million times because I'm a huge sports fan and it resonates with me. But there's real opportunity here for you to be able to bring diversification into your portfolio using things like that. And while advisors are definitely more open to alternatives than they've been before, it's mostly because their clients are demanding it, right?
That's right.
It's because if they don't, then they could lose those relationships. And alts, I would argue, is a relationship builder because you can really, it's such a huge universe. You can really find things that will resonate with your client on a million different levels. So they're seeing that. But 75% of advisors still don't use alts. And the vast majority are allocating something like 5%. Where institutions, it's more like 25 to 30. So there's a huge gap there still. It's going to take a long time to get there. And we as an industry have not done advisors any favor by making investing in any sort of alternative incredibly difficult, operationally cumbersome, and in some cases just annoying. Like just to trade BTAL, which is an alternative ETF. If you tried to do that in your Fidelity or Schwab account, you'd get a pop-up saying that you need to change your risk tolerance to aggressive. And I would argue if I am an aggressive investor, I am definitely not doing hedged equity or market neutral. Like that's like completely counterintuitive. But because of that, it sort of makes people shy away because then you got to change your client's risk tolerance, and it's not reflective of reality just to be able to make a trade.
And when you talk sports diversification, sports rights, like I immediately think of the fact that the Atlanta Braves are publicly traded. Is that what you mean, or how do you think about allocation to sports as an alternative investment?
No, I think the private equity aspect of it. So my favorite fund in that space is the one managed by Avenue Capital, because I think that what they're doing is really interesting. They weren't one of the high flyers that was approved by the NFL, but they invest in MLB and NBA and things of that. Mark Lazary is the kind of founder of that firm. He used to own the Bucks. But he talks about it also in the credit sense. Most people don't realize that banks won't lend to sports teams because the goal to have a franchise that's worth anything is based on whether or not you win, and you don't win if you don't spend, and banks don't like that so much. So, teams, when they need access to the credit markets, they don't really have any place to go. So that fund does that. They also do what they call emerging sports. So I've done a bunch of interviews talking about cricket. Like, cricket is an incredibly interesting area. Private equity is looking at buying cricket teams. Women's sports is huge. You have the yacht league that's out there, and some of this, as we have the proliferation of streaming services and everybody trying to get live events, because that's really the only way you can get ad dollars, you're seeing this more and more, which gives you more and more opportunity to make money in sports that maybe we wouldn't have paid attention to a while back.
Yeah, lots of different opportunities out there. Shana Sissel, thank you so much for joining us. Shana Sissel, she's the president and CEO of Banríon Capital Management, based in Chicago, but originally from Boston. We've got that all cleared up for next. Looking at the market share, we do have a little bit of green on the screen here. The S&P's up 0.5%. The Nasdaq's up 0.6%, and the small cappers outperforming today. The Russell